Dear fellow business owners, in this video, I'm going to cover the biggest mistakes made by small business owners while filing their tax return. My name is Jayanti Ganapati. I'm the owner of Finaccurate. We are an accounting firm based in Boston, Massachusetts. As accounting firm, while we are working with small business owners, here are some of the common issues that we see while working with a small business owner. Number one, as a small business owner, you're not thinking about tax return and how important it is to provide all of the documentation to make sure you are taking advantage of all of the deductions and credit in your tax filing, thereby you are avoiding overpaying in taxes. I have seen some business owners are simply sending their bank statement to their CPA after the end of the year, like in January or February. All they are providing to their CPA or tax preparer is just a bank statement, and the tax return is filed just based on that one document. This is a blunder, according to me. This way you are missing out on a lot of the deduction that you are otherwise eligible as a small business owner, and you can legally take those deductions in your tax return, and you're completely missing out on those. And the third mistake I see is the small business owners are sending their tax documents and financial information very late. Say your tax filing is due April 15th. If you're filing as a sole proprietor or a Schedule C, then April 15th is the deadline. So most of the small business owners are sending their financial information and documents, say, second week of April, or in the worst case scenario, they are sending it on April 14th when the tax deadline is due on April 15th. So what happens in those situations? So when you're sending information very late, your CPA or tax preparer have to file your tax return by the deadline. So they are also in a position not to get into the details. They just collect all the information that you gave them, and then they rush to file your tax return just to make sure your tax return is filed on time and taxes paid. They want to make sure you are complying with the requirements for tax filing and tax payments, and even the tax preparer doesn't have the time to make sure you have provided all of the documentation, you are taking all of the legitimate deductions that are available to you as a small business owner. So they also don't have the time to dig into the details. So you actually, as a small business owner, are putting the tax preparer in that situation, and that's actually is reflecting on your tax return, and you are the one who are impacted by that, because you're the one ultimately paying the taxes. So if you're not taking the deductions and the tax credit that are available to you, you end up overpaying the taxes. And the fourth major mistake that we see is, say, they're not providing your documentation, and let's say you're operating your business at a 10% net profit margin. Let's say you have 15,000 in tax deductions that you have not taken because of all of the issues we discussed, that you didn't capture all of the transactions. You made some business expenses from your personal account, but you missed your account for that in your tax return. So you missed a deduction, a total of 15,000. Could be a combination of deductions and tax credit. Say the $15,000 in taxes on a 10% margin business, it translates to 150,000 in revenue that you will have to bring in more to pay for this additional taxes that you are not required to pay. As a small business owner, you know how hard it is to bring the revenue in, and mistakes like this, which can be easily avoided, and thereby you can pay the right amount of taxes. But if you overlook this, you are working really hard to bring more revenue in just to overpay in taxes. So if you are aware of these common mistakes and make sure you are putting a process in place to avoid these errors, which I'll be covering in this video, what are some of the steps that or process that you can follow to avoid making these mistakes, and make sure you are taking the deduction. Thereby you are not overpaying in taxes, and you're not really working hard to bring that additional revenue just to overpay in taxes. Here are some tips to make sure you are deducting all of the business expenses in your tax return. Number one, start preparing for your year end from October onwards. Yes, I said that. The year end starts from October. If you're following a calendar year, January to December, you have to start thinking about closing the year and preparing for your tax return from October onwards. So as a small business owner, you should be maintaining your business transaction like bookkeeping on a regular basis. Even if you're not keeping your records up to date on a monthly or a quarterly basis, make sure you look at it by October. Sit down in October, make sure you recorded all of the business transactions from January to October in your bookkeeping software. It could be QuickBooks or Xero. Making sure your business transactions are up to date in your accounting software is number one thing. And next is once you have your books up to date, making sure you gathered all of the bank statements, loan statements, and not only gathering those documents and also reconciling your financials, your accounting software financials to the bank statements and loan statements, or any other external evidence. Say if you have to pay bills to your vendor, make sure your vendor statement matches to your financial records. So completing a full reconciliation of your internal records to the external evidence, and simultaneously gathering those documents. So document gathering and getting your financials up to date. And the third thing is as a small business owner, you might have accidentally spent some business expenses from your personal account. Make sure you go through your full year to make sure whatever personal business expenses you used your personal credit card or bank statement to pay for, make sure you are reclassifying those as a business expenses. And other major one is, as small business owner, you will be working with many other independent contractors. So you are also required to issue a 1099. So October is when you have to start looking at all of the different independent contractors you have worked with. Make sure you have their W9 information, which is the tax form, to collect their social security and address and everything. So that way, by January, you can issue them a 1099 form. And lastly, as part of preparation to the year end, make sure you ask for a review meeting with your CPA or tax preparer. Sit down with the tax preparer and discuss with them where you are at for the current year, and what is your plan to end this year, what is the revenue going to look like, what is the net profit is going to look like. Having that tax planning conversation with your CPA or tax preparer is highly critical. So you still have any corrections to be made or any actions to be taken. You still have November and December to take care of it. So you can still take advantage of those time. So if you're having this conversation in January, it may be a little late to implement certain things in your business. So it's critical to have that conversation with your CPA or tax preparer much earlier before the year ends. So the next advice is come January, what you are doing is now you have your financials up to date, and January, make sure you completed the full year financials and have all the supporting documents gathered. So in January is when you will be receiving all of the tax forms. You'll be receiving 1099s, miscellaneous, or if you have interest, dividends. Make sure you are creating a tax folder. If you are collecting documents by paper, or if you're receiving them electronically, create a folder in your however you are maintaining your records. You have OneDrive or Google Drive. Make sure you create a tax folder for that respective year, and collect all those documents. If you receive tax documents on paper, scan it and put it in that folder. Gather all of the tax documents in one folder, so that way you have all the information in one place. So that's one, because the tax form come from different sources at different times. You don't want to miss if you're not filing them or storing them properly. And create a list of all of the 1099 income that you have generated, and track the 1099s that you are receiving against those income. The reason why you have to do that is sometimes you might not receive a 1099, then it becomes your responsibility still to report that income. You cannot say, I did not receive a 1099 and therefore I'm not going to report this income. You cannot say that. It is still, as a taxpayer, it is your responsibility to report that income. So keep a track of all of the 1099 income, and then mark against that if you receive the tax form or not. For the ones that are not received, make sure you are giving that information to your CPA or tax preparer so they can include that income in your tax return. So these are something you're doing in January. Then come February, make sure you send all of these collected documents that you have in this tax folder to your CPA or tax preparer. After you send it, give them like a little bit of time, like a week or so, and ask for a meeting with your CPA or tax preparer to make sure you send them all of the information that your tax preparer need to file your tax return accurately. Have that check with your tax preparer. One, it ensures they received all of the documents that you received, and sent. And number two is you are having them check and let you know if there are any additional information that's needed, and you are going back and providing them the missing information. It ensures that you have provided all the necessary information and it's all complete and accurate for the tax preparer to do their job. So if you make sure all of this, then that will be helpful. And then the last thing is once you're giving your CPA enough time, or this tax preparer enough time, they're preparing your tax return, and once the tax return is final, make sure you ask for another review meeting with your tax preparer. Go through the tax return with them, have them explain the different forms, how the income came together, what are the deductions taken, and how the tax is calculated. Have a quick review meeting. Doesn't have to be in detail, but I have seen clients who simply receive the tax return and just sign the tax return and send it back. They don't even look through how much income has been declared, how much am I paying in taxes, is it more than what I paid previously, what is the reason. They don't look into all of that. So don't be one of those business owner who is simply signing the tax return. When we finalize our tax return, we sit down with our client and explain, if you're meeting in person or a Zoom call, we make sure we go through the tax return step by step and showing them the different forms, explaining the different sources of income and the deductions that we took, and what is the tax implication, how much they are liable to pay or due to get refunds. So we explain all of this to our clients, so you are sure you are in control of you're making sure all the documents that you provided are reflected in the tax return. You have taken all of the deductions that are eligible. Any questions you have that answered and all that before you finally file sign your tax return and have the tax preparer file it. So as long as you follow these steps and making sure having that preparation prior to the end of the year, gathering documentation and making sure all the deductions are taken into account, and having those review meetings with your tax preparer, collecting all the tax forms and translating that or giving that to your tax preparer. If you follow all of these steps, you can be pretty sure that you have done your part in making sure you have maximized the tax deductions and tax credits for your business. Please make sure to subscribe to our YouTube channel so you can be sure to watch the future videos, and make sure to click on the bell icon so you'll be notified when we produce more videos in the future. And if you like this video, if you found this informative, please share with your other business owner friends so they can benefit from this video as well. Thanks for watching, and I will see you in the next video.